What's going on, everybody? It's Jeff here. Welcome back to the channel. Another positive day inside the market. You have the S&P futures breaking out of that tightening wedge pattern that's been forming over the past few weeks. Tesla beating earnings after hours, gapping up about $15 as I'm making this video. I want to talk about a few things. We are about a week and a half away from the FOMC, as well as second quarter GDP advance estimates. I want to talk about a short-term outlook, especially because I feel this bullish sentiment being talked around all over the internet, and then also talk about a longer term macro perspective. You have the media, the Federal Reserve, the government pushing one narrative, while in plain sight, the big mega cap companies are telling you an entirely different story. I'm gonna break everything down for you guys. So let's get right into it. First off, as you can see, Tesla reporting gapping a little bit after hours. We're gonna see what's exactly said on this earnings call. Let's take a look quickly at this ES/ES, which is the S&P 500 futures. I'm going to talk about this wedge formation that we're breaking out to the upside. We had a little bit of resistance, finally broke through it. Looks like it wants to hold that level, moving to the upside, trying to test that 4,000. SPY does have a gap all the way up to 401. So the next few days are going to be very exciting. But let's bring things back from the beginning of the week. So the financial sector was the first one to report, and Wall Street executives said consumer spending was up, which we saw from that report, as well as retail sales. Markets were volatile. However, they did not think the economy was headed for a recession. We've also had numerous Federal Reserve presidents stating that a soft landing is still possible, okay, and that they don't believe the economy is going to be headed for a recession. We've watched the Biden administration push the narrative very hard, saying there's, a recession is not imminent. We are not going to fall into a recession. I want to talk about those two, big narratives, because we're watching this slow melt up happening, okay, inside the market over the past few days. Earnings, season has just started to roll out, and you've already seen some bigger companies report 371 all the way up to where we are at 396. There's the gap, okay, all the way to 401. Does it look like we're going to be able to get that? Who knows? We're gonna have to see, okay, obviously at the open and during open market hours, but we're seeing this melt up. You're hearing people talk about the bottom, this and that. Well, you can't lose, focus of the bigger picture. So we're just about a week and a half away from that second quarter GDP estimates, and the Atlanta, Fed GDP now, okay, estimate shows it coming in at negative 1.6%. So this would be the second quarter of an economic decline. We've already gotten the first quarter, which was the first quarter of 2022, and this would be for the second quarter, which by definition, the old definition, the economy would fall into an official recession. I have highlighted here a little bit of a caveat. So 2 consecutive quarters of economic decline as reflected by GDP in conjunction with monthly indicators such as a rise in unemployment. So this is where the media, you have analysts, as well as, the government and the Federal Reserve saying we're not going to fall into a recession. And really the only thing, keeping us hanging on from officially falling into a recession once the second quarter GDP numbers are released, and if they are in fact confirming the economic decline, it would be this number right here. This 3.6 is unemployment rate, very, very low. All right, and we've watched this labor force struggle. You've got a bunch of jobs out there that are hiring. We're trying to hire. We cannot find work. But you've also watched unemployment just really not being picked up on, and you have this workforce that is absent in one sense. You have a lot of people that are retired. Also, just a lot of people not working, but they're not collecting unemployment either. So that's where that number kind of skews. Well, here's where the bigger picture comes in, okay? And this, directly relates to Tesla. So Elon Musk had said weeks ago that Tesla's 10% staff cut had, have kicked off. Ex-employees confirming on LinkedIn, saying, and he said numerous times that he believes there's going to be an economic decline, even though he still predicts 50% growth over the next 12 months. Tesla, major company, seeing economic decline, laying off employees. Okay, well, if you remember Monday, we were off to a good start. The market pulled back. Apple was the one that led that. Apple to cut spending and hiring on select teams in response to economic slowdown. Another massive company. They're going to cut spending when it comes to certain, growth areas, as well as not just hiring or to add to staffs, but also backfilling positions of individuals that had left over the last 3 months. another major company. Take a look at Microsoft, same thing, lays off a portion of its workforce as a part of a realignment. Now, if you saw today, I'll go to the daily chart on SPY. SPY was moving great. And all of a sudden, right here, boom, we had this big decline. Well, what happened? Google had stated the same thing. They're going to pause hiring for 2 weeks to review our headcount needs. Now, the sell-off, I think, was a little bit overreacted. I don't think people read between the fine lines that they're just pausing for 2 weeks. However, it's another massive company that sees, okay, that the growth is not going to be there. There's going to be an economic slowdown. This was tweeted just a little while ago as well. Ford plans to cut as many as 8,000 jobs in the coming weeks. Okay, so this really coincides with what I was saying earlier in the video, that you're watching this narrative being pushed by the media, okay, and you know, saying one thing, you're you know, the Federal Reserve really pushing for this soft landing, as well as the government, okay, the Biden administration pushing that same narrative, while you're watching these massive companies just show you that, listen, we're seeing the changes, okay, you know, from our data firsthand, all right, and that we know that there's going to be a little bit of an economic slowdown. We want to be ahead of the curve. You would think that companies as massive as Tesla, Google, Apple, Microsoft, all right, can really have the information and the technology behind to predict what is going to happen in the future. Very forward thinking. Okay, so if we do get that second quarter economic decline, which I believe we will, I would kind of be surprised, you know, this late in the game, especially the way the Atlanta Fed GDP now estimates are coming in. If we did get that, and they try to push that narrative of not slipping into a recession because of unemployment being low, well, like I said, just look at where unemployment is going to lie over the next few months. You've already seen some of the bigger companies start to do it. Wait until, you know, some of the other companies do, as well as some of the retail stores as people begin to shop online. There is some pullback. Amazon already had said that their growth into the building new warehouses is going to slow down a little bit because they've seen online sales slow down, as well as their Prime Day was a very underperformer comparatively to previous years. So guys, I hope this gives you a little bit of a short-term outlook. Okay, if earnings continue to be good, I expect the next week and a half to, you know, continue to move to the upside until the shorts start to pile on, maybe potentially fill that gap to 401. Know that the VIX, the fear and volatility index, will probably rise, all right, ahead of FOMC and, you know, GDP. Shorts will begin to pile on. We're going to see where those numbers lies. Are we going to get the 1% rate hike? All right, now currently only 30% of the market is priced in for a 1%, and the other 70% is priced in for another 75 basis point, okay, hike by the Federal Reserve in just about a little over about 8 days from now. Okay, and like I said, the bigger picture, I still don't think, you know, seeing the entire market SPY back below that 362 low is out of the question. So guys, that's it for this video. I'll see you in the next one.